Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. This is Morning Forex Report. Today's date is February 22nd, 2023. It's my oldest son's birthday. Happy birthday, Matt. And in this report, I take a look at some of the technicals that are driving the Forex market. So let's get started. I'll start by taking a look at the euro versus US dollar, and the story remains pretty much the same on the downside. We have the low price from last week at the 1.0612 as our support level. In trading here today, the market moved down toward a little bit below the 1.0625 level. Let's call it around 1.0623 before finding some support buyers, and we're pushing the price a little bit higher. We're currently trading at 106.38. What we know from the bias here is that the bias is more to the downside. In the month of February, the market has been trending to the downside, but we are seeing some consolidation down here near the lows. But on the top side, what we're also seeing is we have a clear resistance against the 200-hour moving average. We tested it here, we tested it here, and we tested it here. And each of those times the market found resistant sellers against that moving average level, including yesterday's trade, and forced the market back to the downside. The price, of course, has been above the 100-hour moving average, our other barometer for more bullish and more bearish. But each of the time the price has moved above those levels, the 100-hour moving average in near term, the price has found willing sellers. This move to the upside, by the way, is off the CPI data that we saw last week. And that had a lot of volatility. We moved up to another key area up here. We'll leave that for later, but clearly this area right through here is another level of resistance, and the market fell back below the 200-hour moving average. What's important is the 200-hour moving average is our key barometer on the top side. If the buyers are to go higher, we need to get above that moving average. Absent that, and the sellers are still more in control, and below the 100-hour moving average, also more bearish in the short term. Let's take a look at the dollar versus yen, and I look at the 4-hour chart here because we do have a number of swing levels through here where the market found sellers against and buyers against this yellow area right here. Now, over the last 2 weeks, the price has seen the price action move above that area. So, finding some resistance for whatever reason at 135.11, and the market has sold off against that level. In trading here today, in the current 4-hour bar, we did move below the 134.49 level, which is more bearish, but the momentum could not be sustained, and the price has since bounced back within this area. I'm still going to use it as a barometer. If we trade below 134.49, it's more bearish. If we move above 134.76, I would consider that more bullish. But we do need to get above the 135.11 level on the top side to increase the bullish bias for that currency pair. Let's take a look at the sterling versus US dollar next. And on the hourly chart here, what do we notice? We in trading yesterday, the price tried to move back below the 200-hour moving average after breaking above it here, and the momentum to the downside faded. We started to move back to the upside in trading here today. We had earlier buyers right near the 200-hour moving average, and that has forced the price back to the upside. So, like the euro versus US dollar, but in opposite directions, the sterling versus US dollar needs to get below the 200-hour moving average to increase the bearish bias in this currency pair. If we can't, then the buyers are still in play. Admittedly, like the euro versus US dollar, the price action is to the downside, but we are above the moving averages, so that gives a shorter-term bias in that direction. On the top side, note the 38.2% retracement did a pretty good job holding resistance right through here. So we have support against a 200 resistance. It's got 38.2. If we get above the 38.2, that would be more bullish. If we move below the 200-hour moving average, that would be more bearish. Currently trading in between those two levels. Let's take a look at the dollar versus Canada next. And if we look at the, I'm going to look at the hourly chart for that. And on the hourly chart, what are we doing? We're retesting the 100-day moving average. That's this blue line in the chart right through here at 135.137 in yesterday's trade. We moved above that level, and as you can see, we stayed above that level right through here. Oops, I didn't mean that. We stayed above it right through here, and that gave the buyers the go-ahead to push to the upside here. What they couldn't do is maintain the momentum above this area right through here, and we tried to hold this swing area through here but we couldn't as well and fell down to the 100-hour day moving average. But as you can see, we're bouncing back higher, which is a good news for the buyers, and as long as the price can remain above the 100-day moving average. That's more bullish here for this currency pair. I'm gonna go to the 4-hour chart to show you the importance of this swing area through here. And if we take a look at different swing lows and swing highs in this area, we can see that we did have support here, support here, support here. Fell below it there, and then reestablished support right there. Tried to stay below it there, and then move below it. And we have been staying below it through here, and then had that brief move to the upside last week, and the move to the upside trading here today. So watch the 135.26 down to 135.12 as support in the dollar versus Canada. Stay above those levels. The buyers remain more in control as the price tries to break to the upside of this up and down trading that range that we've seen in this currency pair going all the way back to beginning of January. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. Good fortune through trading. Bye-bye.